Hi, my name's Paul Irving and I'm the CEO here at DiVA. DiVA is a recruitment and training company which specialises in apprenticeships, particularly those in the digital and creative sectors. We've developed a tool which helps us plan for the Apprenticeship Levy implementation in April of next year. The reason we did this actually was quite a lot of our clients were coming to us and asking us to help support them in terms of what the levy was going to mean for their business. And although there's a lot of information out there in regard to policy, and a lot of that policy is actually still being created on the hoof a little bit, we thought there was nothing there that really gives you a tool that allows you to plan or model different scenarios for your business. So this is it. It's built on a spreadsheet platform. It's really simple to use. It's basically got two sheets. The first sheet being the financials, which will tell you what your liability is likely to be based on all the different variables. It will tell you what you have in your levy account balance, if you like, which is simply it's like monitoring the cash flow of a bank account. And it'll also allow you to select apprenticeships from all those apprenticeships that are currently available, and how many apprentices you would like to start and when in the year you would start them, and what impact that then has on the levy money that you paid into your account. Okay, so let's get started. Really straightforward. The only data entry cells are those that are coloured in green. And what I'm going to do, just to quickly demonstrate, is I'm going to put a nice flat payroll in of 500,000 a month, giving us an annual payroll there of 6 million. So what does that do? Well, that tells us that we've got an apprenticeship levy liability in the first month there, April, of £1,250. Why is that? Well, that's because the whole 500,000 in that month is taxable at 0.5%, 0.5%. But you also get given a £1,250 levy allowance every month, which equates to 15,000 a year, much like your personal tax allowance. So the first 250,000 of that 500,000 is actually offset by the allowance. So 0.5% of 250 is £1,250, the allowance amount, which leaves the remaining 250,000 taxable at 0.5%, giving you a liability in that month of £1,250. And the government have said that they will top up by 10% every contribution to your levy account. That will be collected in the following month in exactly the same way as your PAYE and your employer NI and so on is collected. And that will give you an account balance in May of £1,375. Now that's nice, easy, straightforward with a flattish payroll that we've estimated through there. But what if we don't have a nice, neat, flat payroll? What if it fluctuates? So to demonstrate that, I'm just going to give quite an extreme example. Imagine our payroll in April was 500,000, but in May we're estimating that it's actually going to fall to 150,000. What happens then is, as you can see, there's £500 worth of levy allowance that is unused. The reason for that is that you've 0.5% of 150,000, which is £750. Take that away from the £1,250 allowance that you're given every month, gives you an unused allowance of £500. What happens with that is that the government will then pay you that back as a rebate, in much the same way they might pay back an employer NI rebate. And they will also reduce that from your levy account. But when they reduce it from your levy account, they will also say, hang on a minute, we topped that £500 up by 10% when it went in. So they will actually reduce your levy account in the following month by £550, giving you a balance of 825. Pretty straightforward. So I'm just going to change that back to 500,000 for the next bit because it just makes it easier to see. What that gives us there, as you can see here, is that by the end of the year, in our bank account, if you like, our digital account, as government is calling it, we will have £15,125 balance if we've not started any apprentices within that year. Okay, so how do I go about recouping that? So on the second sheet, it allows you to select any apprenticeship standard that is available, how long you're going to run that apprenticeship over, and it does vary from apprenticeship to apprenticeship. When you want those apprentices to start, and indeed how many apprentices you want to start. So for the first one there, as you can see, they're all in there. I'm going to select an apprenticeship I know quite well. So I'm going to have a look at the data analyst at level 4. The expected duration, if you like, the recommended duration is 24 months, but I could have selected anything in there. So I'll leave that at 24 months. The service type is something that is unique to DiVA. So this is something we use for our clients. And this is about a differentiated service. And this will come into effect from May of next year when the first apprentices start on the levy. What we're offering is a full wraparound service, which we're calling Platinum, down to a lighter service, which we call Silver, with gold there in the middle. And that reduces the amount of funding required to train and assess that apprentice. Okay, I'm going to move that back to Platinum. And I'm going to look at the data analyst, and I'm looking to start 2 data analysts in June and another one in September. Okay, I'm going to select a second apprenticeship standard, and I'm going to select an accounting apprenticeship at level 3. The duration is 12 months because it's an office-based level 3, which is pretty standard. I'm going to run it at Platinum, and I'm going to look actually at starting 1 in May and 1 in September. As you can see, along the bottom of both these apprenticeships that I've selected, it starts to calculate the amount of cash that is drawn down month by month against each apprenticeship standard. And finally, I'm going to select a third one. I could go on and select more, but I'll stick at 3. And the marketing department could do with an apprentice to help them look after their social media presence. So let's have a digital marketer at level 3. Again, 12 months, and we want that apprenticeship to start in May. As I say, we could add more. We've limited it to 5 at the moment, but if you want to add any more, that's not a problem at all. You can get in touch with us and we can do that for you. So see, what does that do to our account balance? Well, as you can see, this is the key line, and our account runs along there until eventually we actually run out of money in our account. And what happens then is that in this area here, it starts to calculate, because it calculates the government contribution and the business contribution, because what happens when you overspend your levy pot is that it then goes back into the standard apprenticeship funding model. And what that means is that the government will pay 90% and the business will be expected to pay 10%. So you can see along the bottom line in red there what you will actually be paying on top of your levy contributions. Okay, so now as a business, I'm not keen on that. So I just want to use up my levy in the most effective way I can. So what you can then do with the scenarios is you can play around a little bit. So I'll take 1 out of June. Let's see what that does for my forecast. Oof, nearly there. And actually, not only can I reduce them, I could start the apprentices a little bit later in the year. So I'm going to move that one from August and that one to November. And what that does is that says I've now got £1,491 left in my levy pot. But you get the general idea. It really is as simple as that. You just add your estimated payroll and then select from the recruitment sheet those apprenticeships that you might be interested in doing, when you want them to start and how many. Okay, and that's it. Thanks very much for watching. For any more information at all, do get in touch with us in regard to either the levy or anything regarding apprenticeships. That's what we're here for. Many thanks again. Goodbye.